Hello. So today we are going to discuss about L1 derivatives and we'll discuss derivatives trading versus stock trading. So how this trading is different in stock and in derivatives and lots of terminology related to that. So let's start with that. I am Prabhat Kumar, your instructor, and I represent Investors Delight. And again, coming to the derivatives in stock and future and options, we'll discuss about intraday trading, trends and charts, support and resistance, then trade in futures, then trade in options, and leverage in stock, future, and options. So as we go further, let us start with some basics in the intraday trading with the terminology like bid price, then ask price. Ask price is the seller's price which sellers quotes to the people. Bid price is the buyer's price which buyers quotes to the people, and mm, the two prices are always such that bid price is always little smaller than the ask price, and the difference is called bid ask spread. Even for the bank cases, if you think, as we are the loan seeker in the bank, then we get an interest rate, and then bank gives interest to industries and to the people. Bank also quotes interest rate. So the two interest rates are generally different. So the difference between these two interest rate is called bid ask spread in interest rate also. So such is the case. And then we have bull markets. Bull markets means market is in increasing trend, so it keeps on increasing during its bull markets. And bear markets, when the market is in downward trend, it keeps on decreasing for a longer period during this bear market trend. Then we have limit order. We put limit on our order, and based on that trade happens, so that is called a limit order. We have resistance level. So resistance levels are there, support levels are there, so support and resistance levels are there. So this kind of levels are seen in the intraday charts that we prepare for the stock and for index. And then we'll see that there is a resistance. Beyond resistance, the stocks does not move generally, and below the support level it does not go below. So then this is the thing that we observe here, and resistance level and support level we definitely see. And with these levels, whenever these levels are broken by some reason, by forces, by volumes of trades, then we call breakout. So this is called breakout. Then we have long position. If we buy stocks, then it is called long position. If we sell stocks, it is called short position. We have like limit orders, we have market orders where we don't put any limits on that, we just go with the market price and we buy this thing, and we sell the thing, that is called market order. So these are some basic terminology related to intraday trading which we discussed in very short span of time. Coming to the moving averages, Bollinger Bands, and then oscillators, we have seen that these are the terminology we will be using when we'll be doing some technical analysis with some indicators. So moving average is something which we can say is taking the average that happens between the trades from one to another terminal, and that average we can see here. So this is all moving average you can see here. So stock is trading with higher fluctuations, it is going higher ups and it is going higher downs, higher ups, higher downs, all these things are happening. And then we can see that there is a something we can see as average of the stocks for 30 days or 90 days or 160 days or any number of days, and then we see that a straight line which is very much directional in nature, which does not fluctuate much, that is getting traced as in red. So that is called average, moving average. And that you can see, we can also plot exponential moving average on top of this, and sometimes the difference or the crossover of exponential moving average and moving average gives us buy and sell signal. So that's why that's how our trading signals we get. We have a Bollinger bands, we can see, you can see the band is there, upward bands and the downward bands. So between these two bands all our stocks is moving. So these bands gives us an idea of what is the maximum value that a stock can go, and what is the minimum value that a stock can go in a particular point of time. Then we have oscillators. So all these things are there in for our technical indicators, with lagging indicators, with leading indicators. We will discuss all these things in details, but that in the trading section. This is our investment course, so we will not go in much details in our investment course for all these things. And then you will be learning what is price action trading. So what price action trading is all about, that you will be learning. So it depends on the volumes of trades that happens. The volumes of trades is caused by certain factors that leads to momentum that breaks the resistance, breakout happens, and all these things. So that comes under price action trading. And price action trading is not perfect but useful. We know that a stock which is going upward will be in momentum of going upward only. A bullish market is always bullish until there is a turn, or a u-turn is not there, or some kind of thing like this is not there. So all these things are perfect to analyze, because there are chances of making money from this price action trading, but still we don't know how long it will continue and how far it is correct. So it is perfect. It is obviously not perfect, but it is useful. Again, price action strategies on Nifties can be seen. People can trade on Nifty, on Sensex, on various other stocks, anything it can be seen. And basic candlestick patterns, when we see in trading, it's like bearish engulfing pattern, bullish engulfing pattern, bearish evening star, bearish harami, and then bearish harami cross, then bullish rising three. And there's so many candlestick patterns which gives us signal when to uh, understand that market direction is going to change from one to another. When it is bullish, it is going to turn bearish in the next hour. So all these things can be understood by understanding the various candlestick patterns, and that we will discuss as a trader. But since this is all for our knowledge, we will not discuss this in very much details, as we are from the investment zone and we believe in trading for 1 year, 5 year, 10 years, and like that. And we are not interested in very small 1 hour duration trading or 1 day duration trading. So this is just for our knowledge, and we proceed, and we'll also see that there is a trend line, support and resistance as discussed earlier. So we have trend lines as the stock is moving upward. Even though there is fluctuations and all, we see that the trend line can be traced here, and it can be given here. So this is trend line, you can see. And then we have moving averages. The exponential moving average can be seen here. So you can see here that this is exponential moving average, that can be seen here. So moving average, as I discussed earlier, it is moving average, and exponential moving average is not traced, but it can be traced just like moving average. And you can see at various point of time, here it is support that is traced, then here it is resistance that is traced. Resistance is always above, touching all the peaks, and support is touching all the bottoms. And this is kind of trend line, means it is going upward. So support line will also give a trend line, and resistance line will also give a downward trend line. So that is what you can see here. So coming to the trades in futures and options, let us see derivatives trading in a stock market. So what we have, you can trade in derivatives at the National Stock Exchange NSE and the Bombay Stock Exchange BSE. And the NSE allows future and options trade in over 100 securities and 9 major indices. The maximum duration for a future contract is 3 months. And some of the market where future and options trading is most common are the commodities exchange, such as National Commodity Derivative Exchange Limited and multi commodity exchange. The prices of commodities can fluctuate widely, and future and options allow traders to safeguard against the future fall. So all this we are going to realize. Then there is very important concept, that is leverage in the future and options. So leverage in future transactions, we know what is leverage in trading. Like you have $100 of fund with you, and with that you can buy up to $1,000 of securities. So with this, you have 1 is to 10 leverage, and this will lead to lots of exposure. And if you will lose on your trade, then your actual amount that you have will get less than $100. But if you will make more profit, this 100 can become 200 in very less time also. So there are chances of gaining double, and the chances of getting half also very easily. So this is the advantage and disadvantage of leverage. Leverage in option and buying and selling is altogether different case, because in option what happens, you have put your all your money in options buying, and that goes as premium. So you have given all the premium, but in case you do not recover this premium, your all premium will be lost. So 100% loss will be there. But there are chances that you can make double, triple, or even 10 times, 20 times of the premium in the next few days or even hours of trade also. So that way you can make multifold income. So that is kind of lottery, or that kind of betting also, you can say. And this happens with most of the things in which you are doing kind of a speculation, and you are doing all these things. So if unless you are very much sure, you cannot take so much leverage in option also. So staying within your risk margins will help you grow. So you will have to be very much you will have to take very much calculated risk to avoid any bad things in all these things. And then margin and market volatility. So margins and market volatility is something which you will have to understand very carefully, and based on that you will have to decide how much leverage you can take in all these future and options related trade. And you'll have to be aware of the cost. You should know that where your costs are going. So only in options, in fees, in transactions, and all those things, in brokerage, all those things you need to keep in mind before you invest in all these options and futures related trading. So that is what this is was all for today's, and with this I end the session. Thank you.